Welcome everyone to this Thursday edition of Inside India. I'm Sri Jegarajah. Let's take you across your headlines. President Trump announces a 25% tariff rate on India, effective from August the 1st, along with an unspecified penalty for Russian dealings, but later says they're still negotiating. President Trump making a slew of other trade announcements in the last 12 hours, including an agreement with South Korea, copper and Brazil levies, and a suspension of the de minimis exemption. The dollar jumps to a 2-month high as the Fed defies presidential pressure to lower rates. Powell also downplaying the odds of a September rate cut. Then the BOJ just out with its decision to leave rates on hold. And Tata Motors will be shelling out over $4 billion in a deal to buy Italian truck maker Iveco in an all-cash offer. Right, let's bring you up to speed with the decision from the BOJ. And it was a non-event in terms of short-term interest rates staying on hold as widely expected at 0.5%. But they did seem to upgrade their assessment and their forecasts on inflation. They are projecting a higher rate of inflation for 2025, and we are seeing some reaction, upside reaction in the yen against the US dollar. Let's bring in Carrie and Joji now. Carrie, there's a lot to unpack here. The impact of the US-Japan trade deal, the political situation at home, and then, of course, the highlight here is inflation. Cost of living continues to be an issue for the BOJ.
That's right. I mean, I think everyone is expecting them to leave interest rates unchanged, the key policy rate unchanged. It's been nearly 6 months, about 6 months since they tightened. And I think the tightening bias, according to economists, is still very much alive and well. The key focus, I think, this time was, of course, the revision in its price forecast. And given that food prices have gone up so sharply over the last year, and they don't really show any signs of abating, it's no surprise that they're expecting their price forecast to go up. I think the other factor to consider is some of the political risk as well, because even though the worst part in terms of the tariffs and the impact on the economy seems to have been averted with these new 15% tariffs agreed to by the U.S. and Japan, it removes that key element of uncertainty. But at the same time, this new level of uncertainty in terms of political risk has made it very difficult for the Bank of Japan, especially when you consider that there's a lot of pressure on this government, and who knows how long they're going to last, to embark on something more accommodative and more populist, perhaps abandon fiscal austerity to try and get people more money into people's pocketbooks. So I think that is the difficulty. But I think expectations right now among economists are that some kind of tightening from the Bank of Japan is still very possible. The earliest estimates I'm seeing are around September, and they seem to increase a little bit more towards October, but sometime latter half, the final quarter of this year seems to be the expectation. I think, they have to think in terms of the global economic picture as well. You have countries like Germany, the benchmark for the European growth story, revising down their expectations for the GDP numbers coming, for the second quarter at minus 0.1%. This cannot bode well for Japan as well. So I think even though the tariff expectations have come down a little bit, there's also the question of, Sri, has this executive order really be signed? Because August 1st is tomorrow. And if it hasn't been signed, does it mean they're going to have to pay the higher tariffs until the actual 15% kicks in? So these are some of the uncertainties that linger. I think the yen is worth talking about as well, because I think the risk factor there in terms of the politics has been factored in is factoring in quite heavily into the dollar yen, which is trading just shy of 150, 148.68. There hasn't been a lot of talk in recent weeks from the Trump administration about a weaker yen. But on the flip side of that, of course, it makes import prices quite expensive as well. So I think, once again, the Bank of Japan highlighting that inflation as it comes to food is really what's determining the pressure on prices. And it's a bad kind of inflation that they really are struggling to address. Sri?
Absolutely, cost push inflation as opposed to the virtuous demand pull, which we are yet to see, Carrie. Thank you very much indeed for that. Indian markets join us in about 40 minutes. Here's what GIFT Nifty futures are indicating. It does look as if Trump's tariff threat of 25% is going to hurt this market. GIFT Nifty futures 24,680 is what we are expecting. So that denotes about 200 plus points of losses at the get-go for the benchmark, which closed yesterday at 24,855. Remember, we've got what has been a sheaf of disappointing earnings numbers coming out of corporate India as well, which really speaks to challenges domestically too. So that's to be taken into consideration for the mix for the Indian markets directionally. Let's give you the dollar-rupee exchange rate, 87.651. Back to trade. We are just one day away from the August the 1st tariff deadline, and tons of trade news rolling in over the last 12 hours. South Korea securing a 15% tariff, including for its vehicle exports. In return, Trump says Seoul will invest $350 billion into the United States and will buy $100 billion in LNG and other energy products. Brazil got a 50% tariff rate, but some key sectors will be exempt, including aircraft, airline parts and energy. Good news perhaps for Embraer in Brazil. Brazil's Treasury Secretary says the country managed to avoid the worst case scenario. And after several rounds of discussions, President Trump has slapped a 25% reciprocal tariff on India. President Trump is especially frustrated with a lack of market access due to India's non-monetary trade barriers, but he says negotiations are still ongoing.
Well, we're talking to him now. We'll see what happens. Again, India was the highest, or just about the highest tariff nation in the world, and one of the highest, 100 points, 150 points or percentages. So India was one of the highest in the world. They had won 175%, and higher than that.
Right, let's bring in CNBC TV18's Parikshit Luthra in New Delhi to get more on this. Parikshit, first of all, give us India's perspective on this. Is this going to make further negotiations tougher? Because this, at first glance, this US position looks as though it's a negotiating tactic to extract concessions from New Delhi. What is New Delhi's next step? How do they respond?
You know, sources have been telling us that over the last 1 month, both sides were trying to have a breakthrough. On 18th of July, the talks ended. That is the 5th round of talks. And India finally said that there's nothing more that we can put on the table, at least as of now, before the 1st of August deadline. We were told that Donald Trump wants to speak to Prime Minister Modi directly. We've seen this with other deals. He's spoken to leaders of Vietnam and Indonesia directly, and he has announced deals. This was not happening. Let's see whether Prime Minister Modi will now speak to Donald Trump to find that political breakthrough. India has drawn the red lines on agriculture and dairy. In fact, the latest statement coming from the government, Indian government, is that we're studying the implications, that we will take all steps to secure our national interests, especially for farmers, MSMEs, our workers, just the way we've done in the UK FTA as well. We remain committed to a fair, balanced and mutually beneficial trade agreement. So this has been the response, but it's been a shock for Indian exporters, especially in the garment sector, in the leather sector, engineering goods, chemical goods. They say margins will be under pressure. They were ready for a 25% tariff, saying, yes, it will create some pressures, but we'll be able to tide it over. But now you have the question of an additional penalty, which makes things very dangerous. In fact, White House sources replied to a CNBC query last evening and said that additional penalty has not been decided, and the exemptions on items such as semiconductors, pharmaceuticals, steel and aluminum, autos, that will continue as it is.
The hits just keep coming, it seems. And now, Parikshit, Washington wants to impose punitive tariffs on buyers of Russian oil and Russian defence equipment, and that, of course, includes India. How does that, in your opinion, change the narrative?
That makes things very difficult for India. Over the last few days, we've seen even the Indian ambassador to the UK saying that we can't switch off our economy when he was asked about why India continues to buy Russian oil. So we've always maintained that this is in our national interest. Now, just to give you the latest statistics, 36% of our crude oil imports in the month of July came from Russia. So that shows your dependence on cheap Russian oil for the moment. Number two, if you look at our defense inventory, 70% of our inventory, current inventory, is of Russian origin. We've used S-400 air defense systems in the last conflict with Pakistan just a few weeks back. There are at least 2 more units of S-400 systems which have to be delivered by 2026 next year. We're weighing US F-35s and Su-57s of Russia, the 5th generation stealth fighter jets, for our fighter jet program. So a very complicated situation for India. And this morning, the US Treasury Department has slapped sanctions on 6 Indian entities for dealing with Iranian crude companies. So India is now in a complicated position. Donald Trump and US government are putting a lot of pressure in India to buy more and have a deal with US.
A lot of challenges to work through, Parakshit, but it's not all bad news, is it, on the trade front? One story that you're keeping tabs on is Tata Motors looking to buy Italy's Iveco. Give us the details of that $4.3 billion deal, and what does that acquisition mean then for Tata?
Well, it's the biggest acquisition for Tata Motors to date, much bigger than Jaguar Land Rover as well. How will this work out? There was a muted response from investors. The stock was down marginally yesterday, and it seems there are concerns about how much debt will this add to Tata Motors in the years to come. The company will possibly have to resort to external funding as well, according to some analysts. What does Tata Motors really get? Currently, their domestic market share is around 43% in heavy commercial vehicles, around 30% in light commercial vehicles. This deal with Iveco gives them access to European markets, North American markets, and Latin America markets for trucks. When it comes to light commercial vehicles, this is where Iveco leads. They have about a 13 or 14% market share globally, and Tata Motors gets that. They also get access to clean energy technologies, hybrid technologies for the future. So maybe a positive for the future, but currently there are some concerns among the investors.
Parakshit, it'll be interesting to see if this type of story in corporate activity does lend some urgency to getting a India-EU trade deal done as well. Thank you very much indeed for that, Parakshit. Right, let's bring in Jayant Dasgupta now, former Indian ambassador to the WTO, to work our way through these latest challenges with regard to US-India trade relations. Jayant, welcome to the programme. Let's start with this 25% US tariff on India. If this amounts to a Washington negotiating tactic, then what are New Delhi's options now, and how do you think India is going to respond?
It is indeed a negotiating tactic because, as President Trump's recent track record shows, he's done it with Japan, the European Union, and now the most recent one is, of course, Korea. So it is something which he has been practicing, and I think the Indian government was also apprehending something on these lines, since he did not agree to the deal which the USTR had also vetted for the past week or 10 days. So that is one thing. The second thing is about the options. Well, India is not going to give up negotiating because it is committed to having a two-tranche agreement. The first tranche is expected to get finalized by October or November. And the US team is coming to India around the 25th of August to talk further on this. So that is going to take place irrespective of what is going to happen on the 1st of August by way of the additional tariffs. The third point is that the options are, of course, that India may give in a little bit, but the chances of that are not very bright because India's red lines are very clear. in
right.
agriculture, especially genetically modified foods and dairy. There is no scope for, moving back.
Jayant, I want to explore this issue of what seems to be Washington's tactic of playing hardball now and also threatening buyers of Russian crude oil and Russian defense equipment like India with punitive tariffs. We were speaking about this earlier on CNBC, earlier on this morning on Squawk Box with Carlos Casanova. I want to play that soundbite from our earlier guest, and then we'll get back to you, Jayant.
It seems that Trump is now pivoting to being a little bit more punitive on imports of energy and military equipment from Russia. So that perhaps could be the sort of key to opening up that trade deal if India commits to more purchases of US energy and also US military equipment.
That was Carlos Casanova, a senior economist Asia at UBP. Jayant, so if Washington now wants to impose punitive tariffs on buyers of Russian oil and defense equipment, including India, potentially, how is that changing the narrative? And does this all add up to the vested interest that the US has and putting pressure on India to step up, as part of a deal, purchases of US defense equipment and energy?
The Indian dependence and continuing purchases from Russia of defense equipment has come down considerably in the past 5 or 10 years. And the US, from a low level of 1% of India's defense purchases, has now gone up to about 13% in the last year. So India has already started diversifying its purchases of defense equipment. Whether it will buy from the US in even larger quantities is something which India will take a very close and hard look at, because the decision will be taken on absolutely rational basis. If there is scope for joint production, transfer of technology, and a few other conditions, then India will, and of course the state-of-the-art equipment, which is being offered to India. So these are some of the considerations which will weigh on India's mind. As far as this issue about Russian oil is concerned, I think one of the things which has perhaps not escaped the attention of economists the world over is that if Russia were unable, hypothetically, to sell its oil to India and China, then there would be an upward pressure on the prices of global oil. And that would also impact the US and cause inflation. At the moment, of course, inflation is not rearing its head, in the US because of the inventories which have been built up ever since President Trump came to office. But those inventories are going to get used up in another 3-4 months. And after that, I think the cost of living also will start going up. Inflation will start biting even in the US. And that is going to cause a considerable amount of distress, especially to the poorer people. And that will have its political repercussions, especially since the US is going to have an election for at least 1/3 of the elected representatives come November 2026. So these things have to be factored in. India does not expect these tariffs to last very long, but it is prepared for the long haul. If they do last, India will, I think, not compromise on its national interests, as has been brought out yesterday also in a statement from the government.
Exactly. And agriculture is central to that uncompromising approach when it comes to a very politically sensitive domestic sector, which unfortunately, like it or not, is where Washington clearly wants to see improved market access. And the red lines have been drawn very clearly around agriculture by the Indian negotiators. So, Jayant, how do you think this needle is going to be threaded ultimately?
Well, I think it's well-known fact that 46% of India's working population is dependent on agriculture and another 11% on allied activities like dairy farming. So we have a huge number of people whose livelihoods depend on agriculture and dairy farming. And most of the farmers have an average of just over a hectare of land, which is small by any proportion. The second thing is very little of the Indian land, less than just under 50% is irrigated. So farmers get just one crop. They are dependent on the rains. So that is the status of Indian agriculture. It is a livelihood issue. So to confuse it with, India denying market access, I think is not quite correct. And India does not have elbow room to compromise in this matter. So whether the U.S. takes it or not, the offer that India has made, which I understand are quite substantial in terms of industrial products and many agricultural products, barring corn, soya, and dairy products. So if the U.S. takes that excellent offer and goes ahead, so be it.
So it's not all or nothing. It's select market access to those agricultural sectors, subsectors that you just mentioned. So that's what the negotiating is going to be about. So, Jayant, ultimately, is a phased deal, is a mini deal, or a final deal by September, October, the so-called deal by Diwali? Is that all being kicked into the long grass now, or are they still viable timelines?
I think there are still viable timelines because a lot of progress has been made in the past 5 rounds of negotiations. And we do hope that things will come to a conclusion by October. And of course, the US also, one of the things which I wanted to mention is that India yesterday as well stressed the point that it is looking for a balanced deal. Now, balance means that it can't be take and take only. It has to be also give and take. And that give will have to come from the US by reducing not its recently inflated tariffs, but from its pre-Trump days tariffs. And for that, it needs a trade promotion authority from the U.S. Congress, which it doesn't have. The present administration doesn't have that. And that is what India would like to have an assurance on, that for all the concessions it is willing to make, the U.S. will also make concessions. And then only it will be a two-way deal. A give and take would be there.
Jen, it was interesting. We were speaking earlier about Tata buying Italy's Iveco. Do you think India's time would be better spent pursuing an India-EU trade deal?
Yes, definitely. Not only with the European Union, which I think is almost near conclusion because we have set a deadline for concluding it by December of this year. It may get advanced in view of what the U.S. market looks like. India is also negotiating with other countries, and it could also deepen its trade pacts with Japan, Korea, and the ASEAN, which are already there for quite some time, more than a decade. So India is going to hedge its bets, which any country would do. Exactly. And it is likely to, look around for diversifying its exports destinations.
Yes. And there's even a dialogue about warming commercial relations between India and China, which would have been unthinkable some time ago. Jayant, we'll leave it there, sir. Thank you very much indeed for your analysis. Jayant Dasgupta, there, former Indian ambassador to the World Trade Organization. Now, as India and the US struggle to reach a deal, as we were discussing, President Trump has struck one with Pakistan to build Islamabad's oil reserves. President Trump says they are still deciding which company will lead this task. This also comes as the US looks to shore up its energy exports and Pakistan continues to increase purchases from Washington. Pakistan's finance ministry says the deal will result in lower reciprocal tariffs without providing further details. It faced a potential 29% rate. We'll be back in 2 minutes. Short break. Welcome back. You're watching Thursday edition of Inside India. Now, the Federal Reserve left rates unchanged as expected. There were two dissenters, interestingly, who voted in favour of a quarter-point cut. They were Michelle Bowman and Christopher Waller, who both have been touted as possible Fed nominees. But markets are also now downgrading the probability of a rate cut in September after Fed Chair Jerome Powell seems to signal that a cut is not guaranteed despite pressure from President Trump. Treasury yields rose and the dollar index hit a two-month high as traders scaled back expectations for low rates in September. Fed Chair Powell saying that the current policy rate is sufficiently restrictive as we wait for more data to come in. And bear in mind, we have non-farm payrolls, the June number, at the end of the week tomorrow, in fact, stateside. Now, on to one of the biggest IPOs in India this year. National Securities Depositories opened its $458 million IPO for subscriptions yesterday. The issue was fully subscribed within hours of the launch, both by retail and non-institutional investors. Qualified institutional buyers, though, bid for 79% of the shares allotted to them. NSDL holds about 86% of India's securities depository market, where demat accounts have grown nearly 22% annually since 2014. The IPO will see stakes being sold by IDBI Bank and the National Stock Exchange to meet regulatory limits. Right, we're counting down to what is very likely going to be a rough market open and a rough session in India after Washington levelled 25% tariffs on India. And that just gives you an idea of how rocky these negotiations between the US and India in search of a trade deal are at the moment. This is how we are shaping up. Gift Nifty futures are suggesting 24,682 at the opening, so that looks as though it's going to be about 200 points or so in terms of losses at the open. Dollar rupee exchange rate at 87.71. Let's make sense of it all and bring in Rana Gupta now, Managing Director for Indian Equities at Manulife Investment Management. He joins me around the desk here at the SGX. Rana, welcome to the programme. So, 25% US tariff on India, that was unexpected, especially when Trump and Modi are such allies after all. What's going to be the impact on the market and how much lower would it gap?
So let me first respond to the unexpected part. Yes, it's absolutely unexpected. And no, it's not about President Trump and Prime Minister Modi. If you look at Indian-US relations for last decade or so, even more than that, going by 15 years, strategically they've been getting closer.
Yes.
So then 25%, which is higher than 15 to 20% what the Asian players are getting, is indeed unexpected. But I think many people, including us, will view this as an escalate to de-escalate kind of a scenario. Coming to the market, in the shorter term, we would expect market to kind of take a knock, maybe 1-2% down, particularly the sectors that are exposed more, like auto, chemicals, pharmaceuticals. Those will be possible to take a more hit. Electronics, they will take a more hit. And then I think overall for the aggregate economy, the impact will be manageable if this stays for, let's say, a quarter or so, and then we get a deal done down the line.
I just want to explore what this means for longer-term investors and domestic and international investors. But before we do that with you, Rana, we were talking about this earlier on Squawk Box with Raisa Rashid from JP Morgan Asset Management. This is what she had to say.
So sectoral tariffs will be one of the things we're looking out for, but a longer-term story when it comes to investing in India remains pretty much intact. The structural demographic story is still pretty much intact. The policy continuity that we're seeing over there in terms of infrastructure, the revival of urban consumption, etc., I think that narrative is still pretty much intact. So it could take a while, but I think what we do know is that peak uncertainty around tariffs is over. I think that's the most important part when it comes to investing at this point in time.
So, Rana, if we do see a 2 to 3% downdraft for the benchmarks in reaction to this action from Washington, is that an opportunity? Is that a buying opportunity, perhaps, for longer-term investors?
Yes, I would think so, because I think if you look back the development that has happened over a decade, right? Even the government policy is geared very much towards manufacturing. And US corporates like Apple, they have invested significantly in India to develop an ecosystem. They have this China Plus One going from 2015 10 years, where many US corporations diversified the supply chain outside China and invested in India. So I think 25% tariff will be seen as a negative thing primarily. But again, I think one will take a view that this is over the next 3 months of 4 months, we'll get a deal. Tariff will perhaps come down to the average of other Asian peers. And in that context, the current decline should be a buying opportunity.
The other factor here is services exports. Yes, they are at stake in this context, but exports as an overall contributor to Indian GDP are not as high as, let's say, Japan or South Korea. So India can afford to wait for a deal that is more favourable, yes?
That's right. The direct impact are actually manageable,
yes,
because total export to US is just 2% of GDP, right?
Yes.
And you take a 25% tariff, do some math, some sensitivity, some elasticity, probably the hit is 30-40 basis point to GDP. So on aggregate, it's not a great impact. It is manageable because India can export to other countries, and some of the policymakers have the room to give some stimulus through GST rate cuts, or maybe even RBI can cut rates given the financial stability is there. But I think what is important for India to do well and become more prosperous, wealthy, and accelerate its development over the longer term, manufacturing and exports are very important. And to that extent, we are very happy to see over the last 10 years or so, India's electronics exports, chemical export, auto part export have grown pretty well. And that has created jobs, that has created wealth in the stock market, so on and so forth. So to accelerate the development, I think a tariff which is in line with other Asian peers are required, because as we know that India competes, let's say for example electronics, the competition is Vietnam. Vietnam is 19-20%.
Yes.
25%, if that stays, then then I think Indian companies have to go the extra mile to offset that 5% impact. So I think on the manufacturing-led job creating acceleration growth, for that to happen, I think the tariffs need to come down.
Understood. So ultimately, what does this mean for the investment allocation playbook for the remainder of the year, Rana? And given the balance of risks at home, and arguably the Indian economy isn't really firing to its full potential, and abroad, given what we've discussed about the tariffs, should we be taking a more defensive stance? And if so, how would you express that?
Sure. I think that's a very important question, because if you look at India's domestic economy, right, even let's say the consumers are doing all right, but the financials is not doing well. Asset quality issues are surfacing in some places. What we expect is that going forward that there will be more policy support. I think there will be more rate cut. There's possibility of a GST rate cut, which would support the domestic economy. But I think the way we are thinking about this is look at the consumer stocks, particularly in the retail and the travel area. Look at infrastructure names, that includes real estate, power, telecom, hotels. They are doing very well. And
so consumer is holding up all right, and online shopping, tourism, hospitality, that's the best way to trade that.
That's right.
Right. Given, what about IT services? And we saw that bad news from TCS earlier this week. And that's really connected to the growth concerns in the US market, AI displacement.
Sure.
Is this an area that we just avoid for now, or are there selective opportunities there?
Sure, which was anyway what to get into next, the IT sector, right? It's a large sector in India, employs a lot of people, and thankfully services export is not under tariff discussion at all. So
yes,
that the status quo remains. There the disruptions to AI and other things. Now, I want to make a very crucial point here. If you have to look at the large IT companies who have been around for 20, 30 years, they have built their organization based on application maintenance and development. Few of them employ like 500,000, 250,000 people.
Yes.
For them to adapt to AI, productivity will take a lot of time, and they will have to go through this kind of restructuring.
Yes.
On the other hand, there are some tier 2 IT companies and they're not small, they're like $2-3 billion top line. They're pretty large by their own things. Because they're smaller and more agile, more flexible, they can address this opportunity much better. And then there are American companies who are setting up GCCs in India, which is dedicated service center in India, to have their own development centers. So I think IT overall, the sector will grow. The winners will keep on changing based on who is adapting faster to the technology wave.
Are the bright spots still among the financials, despite what we are hearing about bad loans and unsecured credit?
Within financials, I think the larger banks which has much lower cost of funds, and they did not go out and grow the riskier part of the book very fast in the last 2 or 3 years. They look reasonably safe, and for next 2 or 3 quarters. But if someone has a slightly longer term point of view, even the area that is under problem, the high yield loans, not every company will face same problems. So what we have done is that we are putting a lot of bottom emphasis on which companies have better underwriting standards and collection standards. I think they will come out well out of this crisis. In fact, the stock decline in those kind of lenders who have been around for a long time also should be seen as an opportunity.
So by NBFCs selectively?
By non-banking companies who has a long track record of good underwriting, good collection, and into the secured loans, because unsecured could be a problem.
Rana, we've got to leave it there, sir. Thank you very much indeed for your analysis and joining me. Rana Gupta there from Manulife Investment Management. Now then, one of the southern states in India, Andhra Pradesh, is betting on quantum tech and AI to lead its future. The state is also looking to build an economy that's led by ports and logistics. We sat down with the Chief Minister of Andhra Pradesh, Chandrababu Naidu, for an exclusive conversation and asked him about these possible plans of building the state as the next tech hub of India.
I have done so much of work in information technology. In combined Andhra Pradesh, I started iTech City and promotion of IT in Hyderabad. Today, that city is a knowledge economy hub. All global companies have been located there. Now in Amaravati, I am thinking quantum valley and also artificial intelligence. And also I am going for all high-tech industries. You name aerospace, defense applications, electronics, automobile, and also drones technology, space. These are all futuristic. Now everything is possible. We are attracting huge investment in data centers and also IT companies. That is the area I am focusing now, apart from agriculture and also service sector and industry.
Global names like Apple and Tesla have signaled their intention to broaden and increase their investments in India. It's quite a cautious entry into the Indian market, but nonetheless, they seem to be planting the flag in India. Do any multinationals have any further plans to develop and invest in Andhra?
We are working with them. I will tell you at the appropriate time. But nobody can ignore India.
You're referring to Apple and Tesla?
Not one company, global brands. Global companies are going to come. That it is going to happen in the near future. And also nobody can ignore India. Size of population, size of market, and also how we are moving very fast in economy. That is where everybody is working with India. I am confident all global chains has to come to India.
Would you admit, though, Chief Minister, that there are challenges on that path towards Viksit Bharat and that developmental target? You talked about affordable housing. What about job creation? Is there a crisis in unemployment in India that the official numbers are not stating? And is this a crisis, is this a challenge that is apparent and visible in Andhra Pradesh? And if so, how are you addressing this?
No, challenges will be there always. How to convert the challenges into opportunities? That is where leadership lies. Now, we are all working to create employment and also to eradicate poverty and to empower people. It is a continuous process. Earlier, we didn't have funds. Now we are able to create wealth. We are able to generate resources. Thereby, we can do better targeting. If you see India, 4th best equity country in the world. not China and America beyond us. That is the achievement we had done. Employment. In a knowledge economy, our people are doing extremely well all over the world, not only in India. Now, India is going to become global hub for providing services to the global community. That is happening. Still, huge nation, 143 crore population, aspirations are very high. We have to fulfill all these aspirations. We are working in that direction. We are confident.
What then, Chief Minister, is the longer term developmental goal and vision that you have in mind for Andhra Pradesh? And where are you in terms of realizing that vision?
No, we are very clear. Andhra Pradesh is a dynamic state. After bifurcation, we had some structural problems. Rural economy is more compared to urban economy, and our service sector is less. There were revenues realization also big problem for us, but all problems are temporary. We are having long sea coast. We can have excellent advantage in port-led economy, and also we are having excellent resources. Now we are focusing technology driven and also green energy, Amaravati as a new capital. These are all opportunities available. We are working everything systematically.
Where is Andhra Pradesh in building the green economy, particularly green hydrogen and sustainable urban development?
Our government, national government, is planning to produce nearly 500 gigawatt green energy. Andhra is planning 160 gigawatts in that. That means 1/3. We are having one advantage: solar, wind, and also pumped storage energy. These three advantages. Now going for battery, replacing regularly. This is permanent solution, pumped storage energy. That is the this thing we are working. We are having advantages with reservoirs, and also very, very positive for creating pumped storage reservoirs also. With this, we are going for green hydrogen. From that place to ports, we are going to create transmission lines, special corridor. There we are going to produce green hydrogen, ammonia, and downstream industries for exports and domestic consumption. This is a big area we are focusing. Things are happening very positively. International companies are coming, national companies are working.
What is the value proposition that you are conveying to the Singapore government? Why invest in AP?
One is abundant opportunities. Second is Andhra Pradesh is very, very suitably located. Third one is we are having very strong strength in information technology and latest technologies. Our resources are very, very useful for the development of Singapore or for their operations. We had relations for the last 3 decades. We can work better for the benefit of Singapore and also for Andhra Pradesh. That is where we want to work with them.
Chief Minister, you've said that you want to develop Andhra Pradesh as a maintenance, repair and overhaul hub for commercial airlines. So it's on a level with Singapore at some point in time. Have you secured partners? And how soon could this MRO capacity be operational, and what would it add to the state economy?
Yeah, MRO is one because huge opportunities for job creation, and also for small spare parts we have to come here from India to here, or otherwise for MRO we have to send flights here. So this is the area where you can locate in India We are having huge opportunities. Growth is also very high in India because of size of population and economy is moving very fast. So we are asking them to come to India and set up MRO facility. I am positive that they are also working in the direction.
And what did you learn about port and infrastructure development in your discussions here? And what is the thought leadership and best practices that can be applied to building logistics capacity in Andhra?
This is one area, not only ports, airports, all cargo related and passenger related. How to go effective connectivity. That is where we are working. I wanted to go cost-effective logistics. Andhra Pradesh is very strategically located, 1,000-kilometer sea coast on east coast. Andhra Pradesh is sunrise state. I can do better compared to other states. Now from Karnataka, they have to come to Andhra for port-led economy or connectivity to sea cargo. Even Telangana, even Chhattisgarh, even some other states. All states are depending on Andhra coast. This is where we are specializing. We are having now reasonably 6-7 operating ports. Another 4-5 we are developing. We are having 7 airports. Another 6-7 airports we are developing. And best road network, inland waterways, and also logistics hubs, dry port logistics, all these things we are working now.
Ambitious development plans as outlined there by Andhra Pradesh Chief Minister Chandrababu Naidu that I was speaking to yesterday. Right, Indian markets have joined the trading day, and after the headline 25% tariffs imposed on India by the US, we'll take a look at that market reaction. Markets are down, and we'll take a look at the subsectors as well. Right, we're about 10 minutes or so into the open, so still early days, but at this juncture at least, the Indian markets seem to be relatively contained in terms of the losses after that headline from Washington telling India that 25% tariffs are on the cards. And this looks like a negotiating tactic to extract concessions, especially around agriculture and other areas where market access is looking challenging. So let's wait and see. Both sides will be meeting later on this month on August the 25th. So let's see what those meetings yield. Nifty 50 down by 5, let's call it about 0.6%. We were expecting 2 to 3% declines, but let's see what the rest of the day brings us. In terms of the areas of the market that are most exposed, let's give you pharma stocks listed in Mumbai and how they're handling Trump's 25% tariff threat on India. All of them down with the exception of Glenmark, and particularly heavy losses for Dr. Reddy's, Lupin and Zydus. Farmers are exempt, though, from reciprocal tariffs for now, but that sentiment not being reflected in the market action. Remember that Trump has threatened separate steep tariffs on the pharma sector. India is one of the largest medicine suppliers to the United States. Auto companies are also potentially in the firing line, and let's take a look at and see how they are reacting to the 25% tariff threat. Automakers do fear a drop in US orders, especially in the high-value vehicle and parts segment. All of them down. Mahindra having the worst run, down by 1.3%. Similar story for Eicher Motors. Also, one of the highlights, potentially a bright spot, Tata Motor and its over $4 billion deal for Italian truck maker Iveco. Its shares are looking like this. Tata Motors down in the broader downdraft by about 1%. That's it for the programme. Access Middle East is up next. Have a good day.